Hey everybody, Gabe here. Today I'm going to tell you a story of an actual client that we were able to, myself and my CPA for this client, we were able to come together and do some planning to allow him to possibly save about $80,000 in taxes from his 2020 year. So please remember, this is just a story. It's an example. It's an actual client story. I'm not going to share any names, but short, sweet, and simple, it is an actual story with concepts that you can put together and you can use, especially if you take the time to put together a great A-team. Now, I talked about an A-team in one of my other videos as well as on my podcast. Podcast is Solopreneur Money. If you have any interest in checking it out, go to Solopreneur Money on Apple Podcasts, Google Podcasts, whatever service you like to listen to your podcasts at. You also can jump on my website, GabeNelsonFinancial.com/podcast, and you'll be able to check it out there. But I'm sharing this story because it is great for those of you solopreneurs who are just really doing well. Not everybody's hurting in this 2020 year. There's a lot of people that are doing very well, and they're wanting to know where do I go to make sure that I do the right planning, which is the whole purpose of all these videos and the whole purpose of my Solopreneur Money podcast is to help you create the life you want and really have a great life with this solopreneur life that we currently have. So the story goes like this. A client of mine calls me up and says, hey, by the way, Gabe, and this was in, let's just say, September of 2020. He says, by the way, I am having the best year I have ever had. I'm double on my revenues. I'm double on my profits. I need you to get together with our CPA and put a plan together and present that to my wife and myself so that we can figure out what we're going to do so that we do not give all of this money to the IRS in taxes. Now, for those of you who have paid any attention to either my videos or my podcast, I get really excited about this. This is like one of the real areas that we can see dollar value benefit to our clients is these tax planning strategies that when we come together of the advisor and the CPA and we put our heads together, it's amazing the magic that we can make. And so make sure you start thinking about who your A-team is. And if you need somebody like me or my CPA on your A-team, let me know. We can definitely talk about that. So the story goes like this. He's having a booming 2020. He doesn't want to pay a whole lot of money in taxes or any more than he absolutely has to. Wants myself and the CPA to come up with a plan. Well, the beautiful thing is his CPA is my CPA. I referred him there many, many years ago, and it's been a fantastic relationship. So he has access to the QuickBooks. He has access to my client's books. He's able to pull it up and see what his cash flow is and what his profit margin is and what everything is looking like this year so that we were able to then project out cash flow scenarios for him and then come up with tax planning strategies to help him save money on taxes, real money. And so option number one that we came up with and shared with him is, all right, if things keep going at this record-breaking pace, which we don't know if they will, but if they keep going at this record-breaking pace and you don't do anything different than you're currently doing, you're probably going to pay about $118,000 in taxes. Well, that's not the answer. I mean, his wife would not go for that. He's not going to go for that. If he was going to do that, he wouldn't even have called me and said, hey, I'd like to do something. That's not the case. So option number two was we took a look at his cash flow for the last few years. CPA did this, and he did a great job. He looked at it and said, all right, what's the cash flow been in the fourth quarter for the last few years? And so we noticed that it leveled out and came down a little bit. So we took a little more realistic view and said, all right, he said this amazing first 3 quarters. The last quarter may not be quite so amazing. And if that's the case, what do we need to do to make sure that we put a ton of money away, decrease his tax burden, but also have him prepared for the beginning of next year? Because his industry has a tendency to pay him in chunks, is what it has a tendency to do. So we got to make sure we protect his cash flow. So option number two in the tax planning scenarios for him was basically to, one, he wanted to go buy a 4-wheeler. Now, you probably can't see this unless you can see all the way through that back window back there. It's snowing here in South Dakota right now. So today would be a great day for him to have that 4-wheeler with the blade on it. He can blade the snow off of his business area, and he's good to go. And so A, he wanted to make sure he got that. B, he wanted to know how much money he could put away in his retirement plan. Now, what you don't know is I've been talking to this client of mine for years about putting a 401k into his business, and we finally were able to get it done with the idea that not only can he take advantage of the salary deferral to max out, but we also were able then to look at doing profit sharing contributions, and this is the perfect year for him to do that, and he could do up to 25% of his W-2 into the 401k profit sharing. Finally sunk in with him, like, yes, I'm ready to go do this game. So we were able to then put 25% of his payroll in. We did 25% of his wife's payroll in because she's on the payroll as well. And his one employee, he's really close to being a solopreneur. One employee that's a full-time employee, 25% of his W-2 into the profit sharing contribution. That totaled about $53,000. And then we had a couple other little miscellaneous expenses that we were looking at, which will come up in option 3. That one change of going from record-breaking revenues to a little more realistic revenues and buying the four-wheeler, adding in the $53,000 in profit-sharing contributions would save him about $80,000 in taxes. Now, I know that we dropped his revenues a little bit, but realistically, if they're record-breaking, then he's going to have to pay a little more taxes than that. Now, option number 3 we looked at was, okay, what are some of the other things that he could do? So option number 3 includes the four-wheeler. Option number 3 includes the profit-sharing contribution. Then he's like, well, maybe should I buy a new vehicle this year? So he wanted to know how much money he would save if he went and got himself a brand new Yukon XL Denali. And he did. He went and got it, saved him about $3,000. He's done this every few years. Those of you who have done this before know there's some tax savings in there of making that type of purchase. And I also started talking to him about prepaying expenses for the first quarter. I said, well, why don't you go prepay your professional liability? Why don't you go prepay your CPA who was on the line? He's like, yeah, you can pay me ahead of time. It's fine with me. Why don't you go prepay any insurance that you can prepay any software that you can prepay, and then go take a look and see if you can do a health savings account, either through the benefit plan that you have available or if your wife's benefit plan is available to her. Let's see if we can take advantage of that, at least for future use as well. So those options were going to save him another chunk of money, but short, sweet, and simple, those were the options we discussed. Now, he just called me a couple days ago. Now, I'm recording this in the beginning of January. He just called me a couple days ago and said, hey, by the way, I pretty much prepaid everything. Have you talked to our CPA? And he's like, well, if our relationship goes south, I'll have to give you a refund. He's like, that's okay. The relationship's not going to go south. It's going to be just fine. So he is well on his way to being able to have most of that money saved for him. I mean, yeah, $16,000 or $20,000 on a four-wheeler doesn't really mean you're saving the money, but at least he has something to show for it. And then he's got a whole bunch of money he went into retirement accounts rather than buying other equipment or other things that he doesn't truly need. And this will then allow him, side benefit, allows him to get closer to his retirement goal, because instead of just putting $19,500 plus a company match into his 401k, he's got nearly 50 grand going in just for himself this year. Well, it doesn't take long when you start putting $50,000 a year away, A, to save on taxes, but B, to build up your retirement accounts to get you closer to that retirement date. And that was one of his major goals. So what do you take away from this? Take away from this a couple things. One, you need to make sure that you build an A team. Find an advisor, find an accountant, and find an attorney. These 3 items, the advisor, the accountant, the attorney, we're here to help you. We're here to help you save money. We're here to protect your business. We're here to protect your family. We're here to plan out your future, help you grow your wealth, but we're also here to save you money on taxes and counsel you as you go along. And so build your A team. The other thing is there's some great tax planning strategies out there to help you really save some money. Reach out if I can help you at all. If not, no worries at all. There's all kinds of resources on my website. Go to GabeNelsonFinancial.com/resources. And there's even checklists and things that will help you go through some of these items as well. Thanks for listening. Have a great day.